Okay, so for project 2, your next part's going to be finding financial information, and I had a deal posted, but I'm going to add some stuff to it. Okay, it's part of what I've thought. I got to get you guys classes in the past. I haven't dug as deeply as I would like into the financial information, and so I'm going to have probably some other assignments that I'm going to put in here and that I'll talk about weekly. That'll hopefully get us into those things a little bit more. So I'm going to have you looking at your financial statements, especially of the company that you're going to be reporting on. Okay, so finding financial information, you found the ticker symbol and you've done all that. Okay, again, I use Morningstar. If you want to use another one, Devin was using Yahoo though, and it didn't have some of the stuff we wanted. You know, and so I found it to be a little bit disappointing. I haven't found one yet as good as the Morningstar. If you do, let me know, because I would love to know it. And believe me, I've looked at quite a few of these. So, but here's, once we get into there, then I want you to look up some things like this. Report the sales trend for the last 3 years. Okay, now I went ahead and chose a company that nobody else chose called Foot Locker. Believe it or not, Foot Locker, at one time I worked for the company that originally bought Foot Locker, which was an old retail company called Woolworth. I don't know if you guys have ever heard of Woolworth. A couple of the old guys are nodding their heads. They've heard of it at least. Yeah, went out of business in the 80s, maybe early 90s. Yeah. But one of the things that they did, they went out of business, but the corporation actually still existed. One of the things they did before they went out of business is they invested in a lot of these little specialty retailers that were kind of coming around at the time, and Foot Locker was one of them. And so really Woolworth kind of went away and became Foot Locker is what actually happened. And Foot Locker's done really well the last few years. But anyhow, so I want to know what the sales trends are. Well, I can come down here and get that right here. Okay, so that's kind of nice. It goes this way. 2014, 2015, 2016, I even got 3 years. Okay, so I got $6.5 billion, this would be in billions, 7.2, 7.4. That's a pretty nice increase. Now, I added this, okay, and I'll repost this so it's there when you guys open it up, but in case you opened up the old one. I said calculate the annual growth rate. How do you calculate the annual growth rate? You guys have been working on some things like that. Anybody know off the top of your head? What do I have? If I've got, let's say this, okay, oops, I'm sorry. You don't need that, huh? Okay. What would this number be here? I know you guys can't hardly read that, but that's my revenue for 2014. Present value. Yep, absolutely. And so my revenue for 2016 is my future value. I've got 1, 2, 3, which is my number of periods, correct? I've got 3 variables. I should be able to solve for the 4th. Okay, I can. Absolutely, I can. Okay, so I want you guys to do that, right? Because this is some stuff maybe I kind of want you guys using a little bit in your report. And it might not just be 3 years. You might want to go back and report on 10 years. Okay, we're going to do 3 years just for this assignment. But when you actually write up your paper at the end, you might want to go back and look at 10 years. Maybe not. You know, it kind of depends on the company. It depends on how well they've done or how poorly they've done or what you want to emphasize or not emphasize. Okay. So next we go to, oops, I'm clicking on the wrong buttons. Report the earnings per share trend for the past 3 years and calculate the annual growth rate. So earnings per share, do I have that on this one? Yeah, I do. 285, 356, 384. Okay, we're going to find, and it's going to be the case with this company here. I can tell by glancing at it, and I find this intriguing, and I hope that you guys will find stuff like this as well. Okay, I'm going to find, I can tell just by looking at it. Okay, I haven't done any of the calculating on this. I have no idea, but my growth rate for earnings per share is going to be higher than my growth rate for even my net income. what the hell should be the difference between the growth rate between those two, right? Okay, and I didn't ask you to do net income, but you'd think net income and earnings per share would be pretty equal, wouldn't you? You would. I mean, but here's the difference. Number of shares outstanding. In 2014, they had 151 million shares outstanding. In 2015, they had 146 million shares outstanding. And in 2016, 141 million shares outstanding. So in the past 3 years, they've reduced the number of shares outstanding by 10 million. Okay? That's pretty substantial. How do you do that? Companies buy back their stock. Okay? Companies make a decision. Foot Locker, what's happened here is Foot Locker's made a decision that they don't have places to invest their money as well anymore. Okay, maybe they've expanded, maybe they've saturated markets, maybe they've done all those things. So instead of trying to do something foolish, they're just buying back their own stock, which should increase the earnings per share even more rapidly than what the net income is increasing. Okay, one little statement, I've done enough I could write a page on my report, right? Okay, so report on the earnings per share, but while you're doing that, take note of some of those things that I just talked about. Take note of how your company is. Companies may also issue stock. They may dilute their shareholder ownership. Okay, and they may do that for a lot of reasons. Sometimes because they're buying another company. You know, Dick's Sporting Goods is buying Cabela's, right? Is it Dick's? No. It's who's buying Cabela's? Bass Pro Shop. Bass Pro Shop's buying Cabela's. They may have to issue some stock to do that. I don't know. Okay, it's going to be an interesting transaction. Bass may be private too. I'm not 100% sure there. Bass Pro Shops may be private. Cabela's was at least and is until they get the transaction and is a publicly traded company. Report the most recent ROE and the most recent ROA. Okay, you're going to find that. I don't think that's down here, but you come up here, you would think that ROE, ROA would probably be ratios. Okay, so let's click on ratios. Key ratios, gross margins, earnings per share, dividend, working capital. You got all these down here, profitability, growth, cash flow, financial health, efficiency ratios. Wow, profitability, but I got return on, ROE is what? Return on, oh, come on somebody. E stands for equity, thank you. Right here, okay, so not too difficult. Return on assets then is ROA, so you should be able to find that under key ratios. That's pretty easy. Okay, I'm also going to throw in some questions, probably the things that don't get looked at enough when folks are doing these reports is some of these things up here. I'm going to throw in some questions about gross margins. Okay, and I haven't done that, but I want you guys to take a look at gross margins. Now, when I look at, and this goes all the way, this is going the opposite direction now, okay, because this is 2007 here. So you got to be careful when you open these up. Make sure you look at the column headers up here. Make sure that you got the right year. Okay, so actually my ROA for Foot Locker is 14.72 was last year. What's the TTM mean? That's trailing 12 months. Okay, so this is calendar year maybe, or at least corporate year end, and trailing 12 months is the actual last 12 months, okay, that they would have reported. So that's why there's a little difference there. In some cases, your year end may actually be the last 12 months. Kind of depends on the data that you're looking at. Corporations can have different year ends. So be careful of that too when you're looking at your column headers. Not all corporations at year's end in December. Okay, corporations can pick their calendar. So some corporations, their year end is in June or May or August or whatever. So, okay, so kind of be careful. Their corporate year end is in January. Odd, but it's in January. So return ROE, 21.56%. But I might ask you questions about gross margins. What's been the trend of gross margins? You know, this I love, okay? Gross margins means that you're getting your revenues minus your cost of goods sold, right? And then you get to gross margins. And why do I love that? Well, I look at a company like this, and you go back to here. They had pretty good gross margins in 2007. Remember, that was the height of the market, right? And then we had the fall off the financial crisis, and their gross margins decreased down to 26%. But look what they've done since then, come up to almost 34%. We've had an increase of 8% in gross margins on a company that's selling about $7 billion, a little over $7 billion a year. Take 8% times $7 billion. That's a lot of money. Okay, so I can tell you right now, that's just absolutely fantastic. I'm going to start reading their annual reports and whatnot and trying to figure out what have they been doing to really improve their gross margins. And it's been kind of a nice gradual increase. It may be tough to find that, but I kind of want to know. I don't kind of want to know that. I got to know that. Okay, I got to know why and how they've been able to increase their gross margins by 8 percentage points in a period of 10 years. Again, it doesn't sound. Can you imagine if Apple increased their gross margins by 8% over a period? Apple sells what, $200 billion worth of stuff every year? Take that times 8%. It's a big number. That's a big stinking number. Okay, and so I like to look at gross margins. Same thing when we get to operating, and we get to operating. They've got operating margin here, and this is another beautiful number for Foot Locker. Foot Locker's just done a beautiful job. I picked a good company here to show you guys, because their operating margins have increased dramatically too. Again, from that 2008, that's when the recession hit. Okay, 2000. So that doesn't surprise me. This is a really low number. But how have they done since the recession? Look at that. I mean, it's just been phenomenal. Okay, just absolutely phenomenal. They've done just a hell of a job of managing this company, and so I would expect that the net income, which went from again 251 here in 2007, which was a good year, but then it fell off big time. But look at that nice comeback that they've had, and that's what I would have expected. I like to operating margins fine. I kind of like to look at the operating expenses. I don't know why. We're all going to maybe look at different things. It's basically the same thing. It's just the inversion of it. Okay, so you may choose, and those I find oftentimes here in the financials. And let me show you. You can find a lot of this information that I'm talking about here in the financials. Again, it goes this way. I got 5 years. I could change this to 10 years if I wanted to as well. And here's what's cool about this is I can change it from dollar amounts to percentage amounts, which is kind of cool if I want to look at percentages. And so, like I say, I like to look at operating expenses. It just makes a little more sense to me. In the last 5 years, they've taken their operating expenses from 24% down to 21%. So again, a 3% decrease. At the same time, they've increased their gross profit from 32% to 35%. You know, and again, that doesn't look like a lot, but boy, you know, they've saved 3 there and they've gained 2 there. They've gained 5 percentage points on their sales in 5 years. 1 percentage point, that's absolutely phenomenal when you're talking about companies this size, because you're trying to move the Titanic here, you know, versus a little cigar boat or something. It's really, really phenomenal. Okay, so kind of start looking for those things for your company, and I'm going to add some questions about your gross margins and maybe your operating expenses into this assignment. Probably going to be a simple question like just, you know, what's been the trend? Okay, I might say, what's been the trend of your gross margins for the last 5 years? What's been the trend of the gross margins for the last few years? That you're not going to calculate an annual growth rate like we did with income and those types of things. Okay, so trend might be like I said. Well, they've improved from 32%. The gross margins have from 32% to 34%. Okay, I'm rounding off. You guys probably go ahead and use the decimals, but something like that. So, okay, any questions about that? So that's finding financial information. Probably going to make that due next, what's today, Wednesday the 19th. So, you know, probably about next Wednesday the 26th or thereabout. And there's a couple more things on that assignment that'll be on there. So, okay. All right, done.